Assalamualaikum warahmatullahi wabarakatuh. Good morning, good afternoon, and good evening to Bu Elvia and all of the viewers. So today, Group 6 will present our analysis on the performances of a non-bank financial institution. Our group consists of me, Diva, and my friends here, Dalta and Eli. Next. Next slide. Okay, so in our case, we analyze and compare two companies in the insurance industry, which are Lipo Group or LPGI and Asuransi AMAG or AMAG. So for the company's background, Lipo Group or PT Lipo General Insurance Terbuka is a general insurance company under Hanwha Life Insurance Company Limited, a Korean life insurance company with various business lines in health, property, engineering, motor vehicle, marine, casualties, and other miscellaneous products. The company was built in 1963 and IPO in 1997, offering several product categories, including fire insurance, health insurance for individuals, families, and company employees, motor vehicle insurance, transport insurance, and various other insurances. And so, and for the second company, Asuransi MAG or PT Asuransi Multi Artaguna Terbuka is a general insurance company built in 1980 and IPO in 2005, providing insurance protection for car, health, property, overseas and domestic tolls, and other products such as insurance for personal accidents, cash insurance, lost item due to thievery, transport insurance, heavy equipment insurance, engineering insurance, and earthquake insurance. So for the analysis, both are categorized as non-bank financial institution, large public general insurance companies, positioning second for AMAG and fifth for LPGI, largest in Indonesia, that for offers a similar lines of products, which are health, property, and casualty. Both LPGI and AMAG generate revenues through premiums and investment incomes, therefore share the same nature and accounting principles. Next.
Okay. Next for the horizontal analysis. So basically, horizontal analysis is simply compress each line on the balance sheet between 2021 and 2022 to identify trends and changes in performance. In the component of assets, we can see that the important component is cash on hand and in banks, premium receivable, reinsurance receivable, reinsurance assets, term deposits, and total assets. For the analysis, based on horizontal analysis, it can be seen that total asset of PT Lipo General Insurance increased by 1.21% year over year, or increased by 35.13 billion. This increase was mainly driven by an increase in prepaid expense and advance. The increase in total assets was also driven by an increase in reinsurance asset of 14.72% year over year. This increase was mainly due to an increase in the estimated reinsurance claim portion. Meanwhile, for the total assets of multi-Artaguna insurance is increased by 1.14% year over year, or increased by 53.03 billion. This increase was mainly driven by an increase in time deposits. Apart from that, the increase in assets was also driven by an increase in reinsurance assets. Reinsurance assets increased due to an increase in the reinsurance portion of estimated claims liabilities. On the other hand, there was a decrease in securities available for sale by 8.10%. In summary, the increase in total assets for both company suggests that they are growing, but the difference in the growth rates indicates that LPGI is growing at a faster pace than AMAG. The difference in growth rates implies that LPGI may be making more aggressive investment or experiencing higher assets appreciation compared to AMAG. For the liabilities and equities component, the important component is insurance contract liabilities, other liabilities, total insurance payable, and for the equity components is there are return earning unappropriated. For the analysis, we can see that total liabilities of LPGI increased by 7.59% or increased by 155.17 billion. Is mainly driven by increase in insurance contract liabilities and increase in deferred tax liabilities. There were also a decrease in other liabilities. Meanwhile, for the total equity of LPGI, is decreased by 14.12% year-over-year. This decrease was mainly driven by additional paid-in capital. In addition, unappropriated return earning is decreased driven by adjustment to PSA 71, which reduce undetermined return earnings. For the AMAG, total liabilities increased by 7.61%, driven by an increase in total insurance contract liabilities. The increase in total liabilities was also driven by an increase in other liabilities. There was also a decrease in the amount of reinsurance debt. For the total equity of AMAG, is decreased by 8.57% year-over-year, driven by a decrease in other equity components. For the summary, the increase in total liabilities and the decrease in total equity for both company may indicate that both company are relying more on debt to finance their asset growth, which can affect their financial risk and leverage. Okay, next is vertical analysis. So for the vertical analysis of an income statement is based on expressing statement it's expressing each line item as a percentage of total sales or revenue. In this analysis, revenue is set at 100% and other items are sold as a percentage of revenue. We can see that based on vertical analysis, but companies experience an increase in the percentage of profit for the year compared to their total revenue from 2021 to 2022. And PT Lipo General Insurance had a higher increase in profit for the year of 1.62% compared to Asuransi Multi Artaguna, which increased by only 0.34%. This shows that PT Lipo General Insurance is able to provide better performance in converting its sales into net profit compared to PT Asuransi Multi Artaguna.
Okay, so for the liquidity ratio, we conducted calculation and analysis on both firms' liquidity ratio in order to know their ability to fulfill their short-term obligations. So we can see that we don't calculate the current ratio because the typical current ratio is not directly applicable to health insurance companies' books because their balance sheets often do not include the classifications of current and non-current. And in this case, both LPGI and AMAG don't include these classifications. And for the quick asset ratio, we can see that LPGI performed better, and as in for the cash flow ratio, the AMAG performed better. So for our conclusion of analysis, both LPGI and AMAG can meet their short-term debts. And then both LPGI and AMAG quick ratios are above 1 for the year 2021 and 2022, meaning that both able to meet its short-term obligations. And for LPGI, as of 2022, has gone better in fulfilling their short-term obligations, while MAG worsened as their quick ratio declined for 2021 to 2022. And LPGI cash flow ratio has sunk in 2022 compared to 2021, but AMAG experienced the total opposite, which they experienced is a rise. This is due to changes incurred in 2022. LPGI had many significant increases in payments in operating activities because many people claim in that year, while AMAG has significant increase in premium received. As in for the conclusions again, LPGI have larger amount of liquid asset to cover the short-term obligation, but it may be struggling to generate cash from its operation compared to MAG. Next slide. Okay, so for the asset efficiency ratio, we analyze it to know how these companies manage their assets. We can see from all of the calculation, LPGI performs better than MAG. And as in for the inventory turnover and days, we don't calculate because the typical insurance companies do not operate with inventory in their businesses. So therefore, the inventory components not included in the financial statement, and both LPGI and MAG doesn't include this uh, calculations or classifications. And for the analysis, the calculations of the several different efficiency ratios, LPGI is more efficient in managing its asset than AMAG. All of the efficiency ratios above show increasing trend of LPGI and AMAG from 2021 to 2022, showing both companies get more efficient each year. And LPGI has higher asset turnover, debt turnover, and credited turnover, as well as shorter operating and cash cycles in both years of 2021 and 2022 if compared to AMAG. There are no significant changes in LPGI and AMAG performance of all the indicators shown, means that both firms' effort in getting more efficient are stable. Next.
Okay, next we will discuss about profitability ratio using ROE, ROA, gross profit margin, and cash flow to sales. From this indicator, we can see that AMAG is more profitable and healthier than LPGI because AMAG asset, equity, and revenue generate higher net income, gross profit, and cash flow from operation than LPGI. AMAG has increasing trend in 5 indicators, indicate that the company is better performance in generate profit from time to time. LPGI has fluctuate trend with high difference in 5 indicator, indicates their performance doesn't stable and tend to decrease. LPGI's ROA in 2022 are higher than AMAG, but the increase is significant, so it doesn't guarantee the stability. Okay, next slide. Okay, next slide. We will talk about capital structure ratio from 3 indicators: debt to equity ratio, debt ratio, and equity ratio. We cannot calculate interest coverage ratio and debt coverage ratio because but AMAG and LPGI doesn't pay interest annually due to their nature in business. Okay, but both company have decreased in solvency from 2021 and 2022, indicates by an increase in the debt to equity ratio and debt ratio, also decrease in the equity ratio. LPGI has high debt to equity ratio, indicates that LPGI are more risky company because it relies more on liabilities, so the default risk will higher. From the 3 indicator of solvency, AMAG long-term finance are more stable than LPGI because AMAG is utilizing its asset, borrowing less money, and has a small gap between debt and equity, so its default risk will be lower. Next slide. Okay, in this slide, we will talk about sustainability analysis in LPGI. First is waste management. Okay, LPGI use 3R, reduce, reuse, recycle principle in their waste management. Most of their waste are paper from office administration activity. It will manage by the General Services Department. They cooperate with the vendors in terms of the management of waste paper into pulp. The output will reported to Finance General Department and recorded in LPGI Treasury. Next, about recyclable waste. It also managed by the General Services Department, cooperates with a third party who has competence to process the waste into a product. The product will be sold or given to underprivileged families. In 2022, the company managed to obtain about 8.89 million as a proceed from selling the paper and plastic. They allocated this fund to finance CSR program and other environmental management. Second, about the emission. LPGI contributes to releasing greenhouse gases into air from the generator and operational vehicle. LPGI conducted generator emission tests and operational vehicle emission tests periodically. They also established a policy to replace operational vehicles that have been used for more than 5 years with new vehicles to further reduce exhaust emission. Third is impact of the climate change. They have priority leading sector development principle and coordinate and collaboration principle that contribute to prepare guidelines related to sustainable finance. Next. Okay, next is sustainability analysis in AMAG. First, about waste management. They generate office waste like paper and plastic, also canteen waste and B3 waste. They always urge its employees to avoid using plastic bottles and to use personal tumblers to fill drinking water through the provided dispenser. Next is the emission. AMAG reduces emissions by carrying out routine vehicle servicing to ensure its prime condition and to avoid excess emission production. AMAG also use certain type of fuel that produce cleaner gases. Finally, the impact by the climate change. AMAG consistently strives to instill and maintain an energy-saving culture both at the head office and in operational areas such as electricity saving. From analysis above, we can conclude that that company have sustainability report because both LPGI and AMAG run in the financial sector in non-bank. They don't have much waste and emission management, and they also barely explain about impact of climate change to their business. But we can see that LPGI has better sustainability performance in waste management, emission, and climate change. LPGI explain more briefly what they do and their evidence from that activity. But AMAG explain more theoretically without ocular proof. Next slide.
Okay, based on the analysis we have done previously, PT Lipo General Insurance is performed better in horizontal analysis, vertical analysis, liquidity ratio, asset efficiency ratio, and sustainability analysis. Meanwhile, PT Asuransi Multi Artaguna is performed better in profitability ratio and capital structure ratio. It indicates that AMAG generate more profit from the operations, also can stay in operating in long term. And the conclusion is, in our opinion, AMAG is performed better than LPGI in 2021 and 2022, even though LPGI had better performance in more categories than AMAG. AMAG significantly outperformed in profitability ratio, capital structure ratio, and cash flow ratio, which are crucial ratio to measure a firm's performance in typical insurance company. In this sense, our team chose AMAG as the better company. So that are a list of reference that we have seen. Okay, that's all for group 6. We want to apologize if there is a mistake. I hope that we have shared will be beneficial for all of us. Thank you so much for your attention.